You know what most contractors call profit? What's left over after Thursday's payroll, which is like calling leftover concrete after the pour your foundation strategy. Here's the truth your accountant won't tell you. If you're waiting to see profit after everything else gets paid, you're playing a rigged game. Construction flips the normal business timeline upside down. You front all the costs, while clients take their sweet time with draws and hold your retainage hostage like it's a poker game. Today I'm showing you how to create a profit account that actually works in construction, not some theory from a business book written for widget sellers. I'm talking about bank level rules that protect your money before Thursday payroll pressure shows up knocking at your door. Let me paint you a picture that'll make sense to anyone who's ever run a job.
You land a $200,000 commercial build. You're feeling good. You front $140,000 in materials, subs, and labor over 8 weeks. The client's net 30 turns into 45 days because the draw approval got delayed. By the time money hits your account, you've already rated whatever cash was sitting there to cover the next job's payroll. The math is simple but brutal. Revenue minus expenses should equal profit. But in construction, that equation runs backward. You deliver first, pay everyone, then chase payment like you're begging for table scraps. Most contractors operate with what I call the leftover strategy. They hope profit appears after everything else gets fed. Brother, hope is not a business strategy. It's a prayer you say while watching your bank account drain every Thursday. That's why PFCC, Profit First for Commercial Construction, doesn't play games with profit. We create a dedicated profit account with bank-level rules that protect your money before weekly cash pressure hits, not after. Before. Think of it like this. If you're pouring a foundation, you don't wait until the end to see if you have enough concrete. You measure, order, and pour according to the blueprint. Profit needs the same discipline. Allocated first, protected always.
Don't overcomplicate this. A profit account is exactly what it sounds like, but with some serious guardrails. It's a separate bank account that gets funded every allocation cycle, weekly or biweekly in construction, not that fancy 10th and 25th calendar nonsense that doesn't really match payroll reality. Here's the key. This account lives at a different bank than your operating accounts.
Why the distance? Because when Thursday payroll pressure hits and you're eyeing that profit account like a chocolate cake at a church potluck, distance creates discipline. Out of sight, out of mind, out of temptation's reach. Keep the naming simple as Sunday morning. Profit right there on the statement so the purpose is crystal clear. No fancy accounting codes that confuse the purpose. For larger contractors running complex jobs over $500K, PFCC allows project-labeled sub-accounts to isolate cash flow and retainage tracking per job. It's like keeping separate mason jars for different crops, reduces cross-contamination, and makes it clearer when each project is ready to harvest. Here's the discipline part that separates survivors from closers. Funded consistently, but distributed only when financially safe. Quarterly rhythm, milestone-gated. You don't take money out just because the calendar says so. You wait until substantial completion or retainage releases signal it's actually safe.
Let's do some quick math that'll make this real.
Say you're running $2 million annually and hoping for 5% net profit. That's $100,000 you need to protect over the year. Break that into weekly chunks, $1,923 per week. Now be honest with yourself. Can you say you've never dipped into that $1,923 during a tight payroll week? When your biggest customer is 45 days late and Friday payroll is $47,000, that profit disappears faster than free donuts on a job site. Here's where PFCC flips the script. Instead of hoping profit shows up at the end, we force a new equation. Revenue minus profit equals expenses. The math works the same, but the behavior changes completely. When you move that $1,923 to a separate bank before you pay bills, suddenly your OPEX and JobX budgets have real limits, not flexible suggestions, real fences. And those fences force better decisions about pricing, hiring, and which jobs you chase.
How to set up your profit account, the 4-week plan. Week 1, open the account and set the rhythm. Drive to a different bank than where you keep your operating accounts. Open a profit account. Simple as that.
Pick one day per week or every 2 weeks to move money into all your PFCC buckets. Schedule it for the day before you typically pay vendors or run payroll. Example, rhythm. Monday, allocations to profit, tax, owner's comp, JobX, OPEX. Tuesday to Thursday, pay vendors from JobX and OPEX buckets. Friday, run payroll from OPEX. Document this rule and train whoever touches your bank accounts. Money moves to buckets first, bills get paid second. If they skip it because payroll is tight, the system breaks. Skip it once, and you've taught everyone that profit is optional. Week 2. Calculate where you actually are, caps. Look at your last 3 months. Where did cash really go? Let's say you brought in $300,000 over that period. JobX, direct job costs, $210,000, 70%. OpEx, overhead, payroll, rent, trucks, $75,000, 25%. Owner's comp, $12,000, 4%. Tax, $3,000, 1%. Profit, $0, 0%. Don't judge it yet, just see it. This is your baseline, where cash is actually flowing right now. Then pick a conservative starting profit percentage. If you're at 0, start with 1 to 2%. Don't jump to 5% overnight. You'll strangle cash flow and panic back to the old system. Week 3. Map your cash flow to your allocations. Here's where contractors usually screw up. They set a schedule that doesn't match when money actually shows up. Map your allocation days to your customer pay app calendar. If your biggest GC pays 30 days after approval, don't schedule allocations the week before that check clears. Schedule them the week after. Identify project milestones, substantial completion dates, retainage release schedules, change order approvals. These tell you when profit is actually safe to distribute, not just when the calendar says quarterly. Week 4. Draft your distribution policy. Quarterly distributions are the reward, but they're milestone guarded. Don't cut yourself a profit check when you're still waiting on $50,000 in retainage or when a change order dispute is unresolved. When the stars align, quarterly timing meets safe milestones. Split your distribution smart. 50% owner reward, 25% debt snowball. Attack the smallest or highest interest debt first. 25% reserves. Maintain 2 to 4 months of OpEx in liquid reserves before you celebrate with equipment purchases or expansions. If your monthly OpEx runs $25,000, keep $50,000 to $100,000 accessible. A new excavator won't help if you can't make payroll next month.
Here's the guardrail that makes everything work. Allocation first, every single time. Money moves to profit, tax, owner's comp, JobX, and OpEx before you pay a single vendor or run payroll. No exceptions. No, just this week because we were tight. Why? Because this is where JobX and OpEx discipline actually happens. When your OpEx bucket has $22,000 in it and payroll is $24,000, you've got a problem. But it's the right problem. It forces you to call that slow-paying customer, tighten OpEx overhead, raise prices on the next bid, get serious about collections. If you raid profit to cover the gap, you just taught your business that limits are suggestions. And once limits become suggestions, you're back to playing the no-win game. Look, the math is simple. The discipline is hard. But after 90 days of funding profit first, instead of hoping for leftovers, you'll have built a foundation that separates surviving contractors from thriving ones. Here's what I want you to do right now. Go grab the book, Profit First for Commercial Construction, on Amazon. It walks you through the full system, JobX versus OpEx, caps versus taps, all the percentages adjusted for your trade and risk profile. If you want hands-on help setting this up, head to profitfirstconstruction.com and schedule a call with our team. We work with contractors every single week who are tired of being the last person to get paid in their own company. And if this made sense, hit subscribe and the notification bell. Every week, we're breaking down construction cash flow in ways that actually work on a job site, not in some textbook. Now go open that profit account. Your future self will thank you.